Hello, I'm Martin Bakkerdax with the headlines from the International Business Times UK. Spain kicked off a series of bond sales today that could prove critical in its efforts to avoid the fate of bailout EU neighbours Greece and Portugal as it seeks to trim its budget deficit and stabilise its struggling banks. Government's plans to raise around €5.5 billion got off to a bumpy start, however, as short-term borrowing costs in Tuesday's Treasury bill auction nearly doubled from similar efforts last month. Spain sold around $3 billion in 12 and 18-month T-bills, bought mostly by the nation's banks, at yields of 1.4 and 3.1% respectively. Both costs were around 85% higher than auctions in March and reflect increasing investor concern over Prime Minister Mariano Rajoy's ability to meet EU-mandated deficit targets. Benchmark 10-year bond yields fell briefly on Tuesday, but they are hovering around 6% and they're moving closer to that 7% threshold that triggered bailouts in Greece and Ireland. Spain's going to need a successful auction Thursday of 2- and 10-year bonds to continue access to the capital markets as it seeks to borrow another €18 billion between now and the end of the year. That's the headlines from the International Business Times UK. Thanks for watching. I'm Martin Bakkerdax. Stay right here for more news updates.